The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Well, apparently I'm on. I can't hear anything, didn't hear anything, and my connection's dropped a couple of times. Hopefully everybody can see me. Maybe the engineer can actually say whether he can see me or not. I don't have anything here on my Skype view. Sounds okay. We hear you. Do you see me? I don't know. Use? I don't know what that means. I got to have it. Anyway, of course, as always, we're glad to have you here at this time. Again, not hearing anything. Okay, we got all kinds of technical difficulties. We'll work it out as soon as we can. See if there's anything else going on here. Maybe this will fix everything. Well, Skype is acting goofy. I got no picture, so I don't know if I'm up or not. It kind of shows kind of like this really milky thing. I've never seen that before. Anyway, little things tend to throw me. I tend to be quite focused, and until I know what the problem is, it bugs me, well, as many people do. Of course, as we get into the markets today, probably if you're long, you're a little bugged. Off almost 11 points in the S&P cash. We got down to 23.44, and let's call it 23.45, and have bounced 6 points. No energy up, no energy down. We don't even have 2 billion shares on the New York Consolidated tape today. We'll talk more about that. And again, well, NASDAQ off 27, a little bit more damage out there, but pretty much in line for what you should see in a pullback. Now, the question is, what kind of pullback are you going to get? Is this just consolidation before going higher? Well, I've got to say, there isn't a lot of volume. And the volume that we did see earlier in the day was hugely short volume. Not a lot of people just selling individual stocks, but people going short. I was watching the tape on several stocks and was kind of amazed to see just how many people were shorting this. Now, maybe it's the smart men of the street shorting. Maybe it's retailers, retail traders. But generally, retail traders short in the morning and then are forced to cover in the afternoon. It's very rare that you see a lot of people come in Monday and say, short the farm if they are professional traders from the street, big street names. So I thought maybe by the end of the day, we're going to get a good sign. One, either I'm wrong in thinking that we're going higher, and that even with all the short covering at the end of the day, we can't do a lot to repair the damage earlier. Or we're going to have a huge short squeeze by the end of the day when the big men of Wall Street throw a little of that snow off of them that they got Friday and over the weekend and get back to work. So, again, not a lot of volume, still not even 2 billion shares on the NYSE, so that's fairly light. We're going to talk more about volume in the coming days. I spent a lot of time over the weekend working on that. But for the most part right now, saw a lot of gaps get filled. I was in one of them. I didn't think the gap was going to get filled, but getting a little bit of repair, so I'm feeling a little bit better about that. But went one more time down in a lot of these stocks, and volume was not there. They're starting to bounce now, but you can make a case that you could be long or short individual equities. I am not short or long the indexes. I am long the stocks that I think are the strongest. And unfortunately, maybe they should have held up a little bit better into the selling today, but we'll see. Of course, the proof is in the pudding. In that case, off 11 points on the S&P cash. But again, we'll talk more about volume as we go through the day. As always, we like to come to you at this time, but I already played that. So we'll go on to a little bit of history. Yeah, I was somebody in the den said I was looking for 2361 into quarter expiration. I was actually looking for, something. Oh, I know what happened. Now we're starting to get, I'm starting to get some, figuring out what's going on. Time window. Here we go. Now we're getting cooking. You know, I forgot what happened. I updated all my machines over the weekend to the latest version of Windows, and I guess they must have reset a few things. I checked some stuff right off the bat and couldn't figure out that I'd missed anything, but I think I did miss some stuff. I already have the Creators update installed on all my Windows 10 machines. I think it just reset a couple of settings out here, so we'll take a look at that. Anyway, we've got history. On this day in 1973, Dr. Martin Cooper, he is the engineer and inventor of mobile phones. Martin Cooper, inventor of the cell phone, a former general manager for systems division at Motorola. On this day, made the first cellular phone call. He's the inventor of that brick that everybody used to see on Miami Vice, as we talked a little bit earlier before the show started, to make a call on a portable cell phone. So what do we have out here? A long lead time. If you really think about when cell phones really became prominent, I had one. It had to be in around 1990. I had one in the car. I don't think anybody. There were a few people that carried the bricks, but they still needed far too much power. But I think that's the first one I got in my car was 1990 or so, maybe 91. Somewhere around there. Anyway, it was kind of interesting, but I do digress. Dr. Martin Cooper is now 88 and worth $100 million because of his most of his and varied patents on all the cell phone technology. Most of those patents ran out, but not before he started really cashing in the late 80s and early 90s. But when you think about it, how long it takes from a product actually to be even showing something that was work, much less build anything out. And then, of course, if you look at 1973 to, 2007 before the iPhone came out, there's a long lead time before a Model T becomes a real nice 57 Buick convertible. I do digress. We'll be back after this break. We'll start looking at charts.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I did want to talk a little bit about some stuff because I worked pretty much all weekend on updating some software, updating my machines, and I guess there's a few little rough edges out here. I guess I need a new version of Skype that I don't have yet because it doesn't show me. It shows me in this little tiny window now that I see it, but it's about 1/4 the size of a postage stamp. Normally it's up in the big thing. For some reason, this thing is kind of, oh, there I am. Okay. Yeah, I did reset a few things. So I'm just figuring that out. Everything else that I normally use during the day works. Just Skype and a handful of other things that I use during the show here. I just need to get back to the settings correctly. But there it is. I see myself. So I'm happy. Wanted to talk about volumes. As we said, even now, we do not have, we just turned 2 billion shares on the NYSE. Not big volume. Doesn't mean that we can't go lower. But does mean that so far today, there is not a lot of juice on this move down 11 or 12 S&P points. We go break those lows of the day, and maybe that can change. Again, I'm not in any index positions. I am in individual equity positions. And do I even have an ETF? I don't think I even have an ETF. Everything's individual equities. I did want to bring up volume, though, because sometimes people say, well, there wasn't volume today. Depends kind of what you're looking at. I did want to bring out one big fact, and that is I'm doing a lot of work on it. I don't have the results for everybody. I'll probably do a webinar for it. But I've been able to get my hands on all the data for the last, since 2007 on volume. And did want to say that there's kind of a little bit more to it than a lot of people think. When you start digging down, the New York Stock Exchange can actually trade on the New York Stock Exchange and the Philadelphia Exchange and other exchanges. You've got many different ETNs, or not ETNs. What is it? What is it? not ETNs, electronic not ETFs. What are the electronic commerce networks? Excuse me, ECNs. I was thinking I had old brain issue there. Anyway, the ECNs can be a variety of them. There's actually 26 different places that you can actually trade a listed, not over-the-counter U.S. stock. BATS Equity is nice enough to actually break all these out. You can download the last 30 days. I actually got the last 7 years and downloaded it, put it in, built a database for it, and have started crunching the numbers. I put some charts in the newsletter. Probably should have had it up. Maybe I'll find it during the show today. But my question was, there's the New York Stock Exchange tape that some people use for volume. That's just stocks that literally traded through the venue that we see there on TV, on CNBC. There is kind of an electronic commerce network for the most part for a ton of others of the New York Stock Exchange. There's the American Stock Exchange, which still has some stocks, but mostly most of its volume now is a lot of ETFs that trade both on the NASDAQ and the NYSE. You've got the NASDAQ itself. But I did want to get back into just a little bit of dark pools because it really hasn't been talked about for a long time. But when I got into the data this weekend, it really started to hit me. I'd known that probably less than, for years, there was at least 25% of the market went unnoticed in these dark pools that don't get reported anywhere from 10 seconds to 90 seconds after they trade into the main feeds. So when you're looking at data intraday and you're looking at your 5-minute charts, you could be a quarter of the way through that before the actual reports hit in these dark pools. Dark pools are not illegal, but they are a way to trade shares that no longer go through any of the ECNs or any of the other stuff. They do have to be reported, and that changed in 2006 and actually went into effect in 2007. So now we do get to see exactly how many of these shares never trade on an ECN that we see as retail traders, never trade across the floor of the New York Stock Exchange or the NASDAQ. But did want to show that there's some very interesting numbers, and that is overall these TRFs, which are non-reportable entities. Just you should, if you're watching on Tiger TV, you should be able to see it. They do split these out, and now over the average of the last year, 40% of shares that traded did not trade in any way that you could get to them as a retail trader. These things were big houses to big houses. And when we talk about volume, does this volume come in? It does come in. But again, reporting on this is somewhat hard to pin down. People say anywhere from 10 to 90 seconds that the trade actually has to be reported on the main tape and on the consolidated feed. But, somewhere around 40% of those things, you never actually have an opportunity. Dark pools, like I said, not illegal. But again, I compared it in my newsletter today as the iceberg. And that is that we're getting very close to the point where shares are being traded that have nothing to do with us as retail traders. And again, does that volume actually get put back in to the volume feed you look at? If you're watching on this, in fact, I'll zoom in a little bit closer. There's a tape A and a tape B and a tape C. Tape A for the consolidated volume of what we see out here is the New York Stock Exchange. Tape B is the X. Tape C is the NASDAQ. And right now we're, 5-day average is 38%. Today we're doing about 38% of these shares in these dark pools. The question is, what do you want to use for volume and what is significant? I'm going to be doing a lot more work on this, probably a webinar. But if you want to talk about all shares traded today, we're already doing 4 billion. So when I give you this number of just turning 2 billion on the NYSE, that doesn't include any of the shares that are actually listed as a separate volume out here under the FINRA and TRF. TRF basically is non-reportable exchanges, and at least non-reportable exchanges for instantaneous trades. And most data feeds for the volume, whether it's the NASDAQ, the Amex, or those others, you have to really go back and figure out what you're getting in that feed. But when you're talking about right now, tape A in the NYSE is showing 543 million shares. That's a far cry from that 4 billion shares that we already showed total traded out there during today. And that's kind of my point out here. We're kind of looking at, even at these volumes, at just the tip of the stock market volume iceberg. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to go through a lot of charts. Please give me a call at 877-927-6648. That's 877-927-6648. We've got my email at path@tfnn.com. And, of course, we can also put a message in the den if you want. Yes, Duffy. Yes. But it was ECNs. That's what I was looking. Electronic Commerce Networks. Those are exchanges that literally have no outward, well, if they're not the New York Stock Exchange or the NASDAQ, they're an ECN. But huge volumes in the markets that we don't see anything about. And generally, I couldn't find anybody that was actually reporting them out in the open for volume. But a lot of stuff going on. I had an email asking me why there's so much volume in these dark pools. And the answer is it's the easiest way to get away from high-frequency traders. There's only one thing I think stock, the big men of the street like less than losing money, and that's even having somebody else make some money off them. And it continues to grow, but 40% of the volume, nothing we see. Wanted to go back and look at the oil ETF today. Started seeing what looked like a fairly decent low in the oil market. We talked about this, a week ago Monday? Was it 2 weeks ago Monday? Yeah, 2 weeks ago. No, it was last Monday. Started talking about looking for an oil bottom or an energy bottom. Mostly, just a lot of these charts were looking exactly like this one in the OIL, the Oil Return Index. November 14th, low of $5.10 with 4.1 million shares. Got into it with 3 million shares, so 25% less. In ETFs, I treat 25% less in an ETF like 50% less in a equity. When you actually shrink that much in an ETF, it is far more than doing the exact same thing in a equity. Anyway, light test of it, got to 505, closed back in, and started adding to my positions with that. But you had a nice low. It tested on a lighter volume. The energy coming off the January 3rd high in this ETF didn't shrink hugely, but did shrink a little bit. And, of course, you had a big gap down with volume. That volume was on the 9th of March, came in with almost 6.4 million shares. Now, here's where the tough sledding comes in energy, and that is it's going to have to chew through these what amounts to two huge gaps. The first one was on the 30th of November last fall, where it went and busted up through this $5, let's call it $5.55 to $5.75 range. This thing busted up on 8.3 million shares, busted down on 6.3 million shares back on the 9th, and now we're really back up into this battle line, which is really this $5.60 area of this OIL. But if you look at this ETF, pretty well diagrammed out here. Lower low, volume declined in an ETF 25%, came back up to the previous gap down and gap up areas. So this $5.60 range is going to be where resistance is in. If you can break through it, that will be support. I've been moderately bullish on crude, but not in crude equities, or not in crude itself as a commodity. I'm more interested in the equities in that sector. So kind of an interesting chart out here. Now, when we look at what crude is actually doing today, much different story, and that is it's off about 33 cents after it broke through $50 with some fairly decent gusto. And a good day to kind of take a look at it because the dollar index is basically flat at $100.40. So you're not going to get a lot of bank shots on the pool table from at least the dollar moving a great deal today. So it's off a little bit at 0.5%. But, of course, it had a lot of juice when it broke back through 50. My thought is that this is in a trading range of somewhere between 50 and 60 bucks. And it could be good for oil energy equities, not so much for the crude itself. But always having more babies and more people needing power. So I looked at that. Again, kind of a quiet day as far as volume. And, we're just getting into the 2.1 billion share part of the day off 9 points in the S&P cash. So let's take another look at one. We brought this one up a few times last week. just because of the super light volume down here at the lows. And that was Pitney Bowes. Never understood why this stock is probably still in business. There's electronic ways of getting around just about everything they do now. But even a dead cat can bounce. In the case of this, is huge earnings disappointment on February 1st at $12.41, 30 million shares on that day. We got back in, it went a dime below it. But guess what? You had 30 million shares to less than 2 million shares on March 27th, and you got to bounce. If you were short this thing, you got to be looking at it and saying, you know what? I probably gotten all the juice I can out of this one in the short term. PBR, continuing to be wary about what happens in the oil patch in Brazil, and probably wouldn't be playing this one. But again, as we said, so many of these oil or variety of energy stocks had made lows on lighter volume. November 14th, $9.14. 48 million shares went below it. In fact, went significantly below it. Volume really never got to that 48 million shares. The best you could do was 31.4 million shares. You got to 870, popped back into the trading range again. Now, you haven't had a lot of juice back up, but again, all of South America politically looks risky at best and even downright scary at worst. I want to take a look at some others. What else do we have? Again, you can give me an email at path@tfnn.com if you would like. And Andy has some new articles out on meats, soft commodities, grains, energies, precious metals, and his commodity first quarter overview on Seeking Alpha. And it's an editor's pick. So we will give a nod of the head, a tip of the cap to our friend Andy Heck out there, if you're more into commodities. What else do we have? PetX, PETX. Rata Therapeutics makes drugs for dogs. These things kind of come back into that $5 range. On fairly light volume, I live around an area with a lot of retired people. They would spend $100 million to save their dog, probably $5,000 to save their child. Their dog, they'll spend any amount of money in the world to save a pet down here. So I kind of think that you have to look at this, too, how much money are they going to get if your dog dies? You might get a little bit. You're not getting a $50 million settlement out of it. Maybe pharmaceuticals for pets is a good area to be in. This one, May 6th low, 516, 920,000 shares, got in there with 200,000 shares. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I had an email out here asking me if I was afraid that the market would pull back significantly this week. And I said, nah, not really. In fact, I said I'd answer on here. Man, there's almost $2 billion worth of IPOs going out this week. Could we see this little pullback out here? Yes. But are they going to let this market fall apart if they have anything to say about it? Now, maybe there's something big that comes along that I'm unaware of and the market cracks. But right now, there were 5 IPOs that I saw that were pricing this week and looked good. Only one withdrawn. About half of them had been withdrawn over the last few weeks. So we're into this port now where they've got about $2 billion worth of cash to come in. Their cut probably going to be $300-400 million on the street. And so I suspect that at worst we stay flat. At best, they push this thing right back up to 2,400 by the end of the week. I'm not projecting a huge move again in the indexes. I'm just saying that at worst, I don't think we've got that much downside. Today, again, volume we got down to 23.44 and 73 cents. And volume just did not seem to do much. A heavy preponderance of people shorting early in the day, and there's still not a lot of volume out here. 2.14 billion shares on the New York consolidated tape. But again, I may start changing what I quote out there. I'm doing a lot of work on whether or not the New York Stock Exchange by itself, without all that dark pool volume, is indicative now that it's starting to actually swamp and has for a while swamped what we actually see underneath. And I think it's probably an entire webinar once I get all the work and statistical work done in there. But now we're off just 5 points in the S&P cash. I was telling one of my subscribers in the den earlier that, I just had to wait much later in the day. I didn't like the way these things looked early on. But, high preponderance of shorting in low volumes tends to make me think that a lot of people are getting short just a little early. As I said last week, if I was shorting, I'd probably think that we're going to make it at least till Wednesday before I would even consider dropping anything other than an intraday short position on the market. And we'll see come Wednesday what happens. Anyway, we were looking at Rata Therapeutics. And what's out there is just, I have to say that if this thing would base out at about $5 and volume disappear, I kind of like that as a biotech. Humans sue a lot more than dogs. People, I think, are more than willing to think that dogs have an issue. Another one out here that was kind of interesting. There was a nice gap in the SCO, which is the ultra short crude oil energy shares, and kind of what we were looking at talking about as support out here. You had a gap, goes back to the 1st of December last year, 4.8 million shares. You gapped up with 6.2 million shares on the 9th of March. We're now back in that. On Friday, we had 1.6 million shares. Today, we got about not even a million shares. Again, light volume pullbacks out here. I think at least this one's more crude oriented. I don't see a lot of evidence for pulling the trigger short on crude. I think you got pretty much everything that you were going to get on the way down. I wanted to look at some other ones. LB, we talked about this one last week, and I said even though there was light volume, I don't know if I wanted to be in any retail stock. The L Brands, which is Victoria's Secrets and some other stores, has broken through its February 23rd 27 million share low at just under $48. Got to 45.94 today, but just 2.6 million shares into that 27 million shares. So we're going to be way, way light. Typically, a standard Wyckoff pattern would say that you'd want to close above 47.93. Again, retail stocks as a mall retail store, I don't know if I could, no matter how good the chart looked, I'd have to see a vast change in the way people are buying stuff. Wanted to look at UPS because I was out getting lunch today. I wanted to see how this reacted to news. Both UPS and FedEx are going to look at regular ground deliveries on Saturday. I think UPS is already going to do it, or FedEx. I can't remember which one. But both of them have plans to go ahead and give Saturday deliveries at the price of regular weekday deliveries. This is to head Amazon off at the pass, which has hired its own delivery people to go into the major cities and deliver for the same price on Saturdays. My guess is that eventually gets into Sundays too, if Amazon has his way, with 7 days a week deliveries in a day or two. A little off, not a lot of volume out here, but you got to think that cost was a big reason why UPS and FedEx, FDX is not. But probably a bonus for Amazon in a big deal. FedEx looks like it's a little better, no volume up here. But maybe they'll get a lot more. Maybe the volume will offset the move, but it certainly looks like Amazon is the dog and FedEx and UPS now are the tail. When it comes to what Amazon wants, FedEx and UPS are going to have to compete for those weekend deliveries. And I just thought it was an interesting article. What else do we have out here that I wanted to look at? Was it Verizon? I think so. Verizon testing previous highs. There's people talking in the den. Okay. High out here, October 28th in VeriSign, excuse me. October 28th, $86.98, 2.2 million shares. Today we got a little dodgy out here with 400,000, less than 400,000 shares here. So there are a few stocks that are weak. This one has kind of been going sideways for a week without a lot of volume, trying to chew through that high volume high. No real signal out here other than another high on light volume, but that's been kind of the general gist of the market. Well, we haven't got to 2.2 billion shares yet on the NYSE. We are just off 5 points now in the S&P cash and 12 on the NASDAQ. What else do we have out here? PBR, SCO, Skechers. We were saying that if you did want to pull a short, that Skechers looked like one of the better ones. I thought maybe that this thing would get to 31 bucks. And that's where you'd want to pull the trigger. We'll talk more about Skechers when we come back. One of the better stocks out here, if you probably wanted to be short, again, retail stocks continue to be kind of ugly. But I wanted another buck for the trigger on it short. We'll be back after this.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we were talking about Skechers out here. Pretty interesting. Huge gap down on the 22nd of, July last year. Came down on 33 million shares. Got into it with 2.3 million shares. It kind of filled a lot of that gap. I'd probably a little too greedy out here thinking that maybe it'd get 31. But a lot of these stocks had been pushing a little higher. May have been a sign that the market was getting a little weaker, that it couldn't fill a little bit more out of it. I thought this could actually go all the way to 32, but volume wasn't all that exciting. You had the first down day come in with 6.7 million shares on the 29th, and Friday, 3 million shares. Today, volume kind of drying up, 1.8 million shares. Again, this thing's probably now stuck in a bigger trading range. Look for $25 maybe, $24.50, somewhere in there. this does have a sign of strength back on the 10th of February with 13 million shares. My guess is if this volume remains low, that you could get that $25. And this thing's probably just bouncing between 25 and 30 bucks for tennis shoes. I guess you wear those out so you actually have to buy them. But I don't know, again, a lot of those things in strip malls and other things. So retail clothing, whether it's shoes or anything else, tends to be at a very low premium these days, and the first to be thrown out with the bathwater when the market decides to roll a little lower. It was TBT. We're going to take a quick look at that. We talked about the gap in the TLT. Now this one came back down to the January 12th low at 38.19, 2.6 million shares. You know, we kind of hit that today with 2.2 million shares already. So it looks to me like you could get back into the kind of volume that we saw at that low. You might want to look at the 8th of February where this thing had 5 million shares. So you knew this thing was coming back down to its lows. I'm thinking that 35, what are we going to call it? 35.50. That could get filled. You got a double gap there, and that's kind of interesting to me. TLT, we'll take a look at it. This thing just kind of ran right back up to a gap that had been around there for a while. That gap had already been filled, but it acted as resistance back up to 121.97. You had 11.7 million shares. Today, 8.3 million shares. So we got up into that level one more time. And is the team going to be that bad? I don't know. Bond is a place to hide out. I'm just wondering if that's a wise decision out here. To me, right now, the TLT looks to be in this trading range of about 122 to 116.5. I don't see a lot out here that tells me different. Could we get a 50% retracement of this move up and then go chase this at 122 and break through? It could. Or could we get a retest of the 115 or 116.49? We could. I just don't see a lot to put your back against in this trade right now. But and probably better to wait for a 50% retracement if you're bullish. And, of course, if you're bearish, the 116.49 out here. But I wouldn't take a bet on either way. Let's just go back and look at commodities real quick. And we're off 33 cents on U.S. crude. And we're up $3 on gold. And kind of a quiet day probably by the end of the day when we look at all this. Again, volume fairly light, 2.2 billion shares as we go into the 3 o'clock hour. In the meantime, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.